Well, I missed last week. Lindsay said it went well. That's good always. She always
We
holds it
have
down.
we have three new people today.
I know. Yeah, that's cool. Do you guys feel comfortable introducing yourselves or telling us where you're from or what you have going on?
Sure, this is Steve White. In the Jacksonville, Florida area. I've got one out-of-state property in Reno, Nevada, which was my primary residence that I kind of became a landlord by default when we moved to Florida. So I've been doing that for 10 years, got that thing paid off and looking to make the next move here in Jacksonville and just kind of struggling to make things pencil here cash flow wise. So just kind of looking to learn more about I'm not afraid of out of state stuff because I've already been doing it for 10 years. So
Mm,
that's kind of my background.
that's cool. Reno, Nevada, huh? That's where you're from?
I'm from SoCal originally, but
Oh, okay.
was out there in the Tahoe Reno area for about 12 years.
Nice. Lindsay's in SoCal.
Los Angeles, yeah. I think he was here last week. He was
Oh, okay.
talking about possibly starting, I forgot, Tennessee. Is that what you're looking at, Steve?
I'm looking all over. I've been kind of diving into Montgomery, Alabama, Huntsville, Alabama, Murfreesboro, Tennessee. Nothing's really penciling in most of those areas. Montgomery, I just started looking at that one. I don't know if that has enough of an economic drive for what I'm trying to do, but
Mm. So that's my full portfolio is in Montgomery, Alabama.
okay.
I'm in Northern California. And every single rental I have is in Montgomery, except for one as of yesterday is now in Prattville. But um, that's my primary market. It works for me, know it very well. It's how I got my start, and I love it there. Love investing there, I should say. I don't like being there, but I love investing there.
Awesome. Well, I look forward to hearing more because
Yeah,
I am new to the game, So are you doing
awesome.
mostly burr stuff there then, or?
Yeah. So I was gonna deep dive into that a little bit. If you guys want to just continue introducing, I
Yeah,
can
sorry,
explain
sorry
kind
to
of what.
derail it there.
No, you're good. You're good. You're good. Lindsay and I can kind of share how we got started if she didn't already do it last week.
Yeah, I think Alex, you have your arm brace.
My name is Alex, and I've just realized that I'm a real estate investor, but I've been doing it for a long time. I've been doing it since like 2005. Um, I have four properties in Washington, the Pacific Northwest, and Puget Sound area. It's a high cost of living area. And no, I have three properties and four units, and I live in one of them.
Oh,
Um,
nice.
and
Awesome.
then I just bought a house in Arizona not long ago. This was also before I realized that I was a real estate investor. So out in Santan Valley, which is the southeast part of the Phoenix metro area, and the intent was to use that as a vacation home and have my friend's elderly dad stay in there. So I'd have a roommate, somebody taking care of the house and all that. But that fell through. So now I got to rent it out to, or now I got it rented out to somebody, just a regular family through a property manager. And that's an alligator. Like I said, I did that
Mm,
with a different intention. Um, and so I'm exploring the idea of out of state investing. I'm not sure if that's the route I'm going to go, but again, with the high cost of living here, it's more of a equity game here, and I have some properties here, so I was thinking about exploring other markets.
nice.
Multiple.
Good. Yeah, accidental investor. I like that. That's good.
How far away are you from Tacoma? Alex?
I'm about 45 minutes.
There is a meetup group called Tacoma 5.
Yeah, the way I got involved in this group and in real estate investing, actually, before the way I realized it, when I was looking at the house, when I was buying the house in Arizona after I had already had it under contract and stuff, I came across Bigger Pockets, and then I came across Chad Carson, and then I came across Dion McNeely, and Dion, as I was going through these personalities, I've Dion's perspective and his approach was what I related most to. And so Curtis Gardner, he's in that Tacoma FI group, and I was talking to him about the social networking aspect of things, or the networking aspect of things in the groups that he's involved with. And he told me about this school, and that's I joined last night after our conversation yesterday. So that's how I
Oh,
am
wow.
here, is through
That's
that group.
cool.
How then?
That's a really cool story. The power of networking right there. Anybody else want to share?
Hi, my name is Jacek. So I'm new to the community, maybe 2, 3 weeks. Been out of state investor in early 2012s, and now I live in New Jersey, where out of state investments were, and looking for other options. This is my area. It's yeah,
Where are you investing
no
at
cash
currently?
flow. Hmm?
Where are you actually investing at currently?
No, so that was out of state. New Jersey was out of state for me before,
Oh, got it, got it.
and I
And then you're,
moved back to the New Jersey area and
oh,
stuck here. But yeah, it doesn't make, the numbers game for
yeah.
as in pure investments makes no sense here.
All right, it's okay. Welcome, Jason. Lindsay, you want to introduce yourself if nobody else wants to go?
Yeah, so I live in Los Angeles. I have a W-2. I started out-of-state investing in 2022. My market is Gary, Indiana. I'm strictly buy and hold investor, very conservative. Um, I have about 10 rentals right now, and I have experience with conventionally looking at an MLS, buying off wholesalers, buying through seller finance, and doing more creative now.
Good, good. Well, everybody, I'm Vincent. I'm in Northern California, a little bit outside the Bay Area. In my primary market, everybody knows California is expensive. I do fix and flips, so I'm buying distressed properties, fixing them up, putting them back on the market. That's my day-to-day here, but I also have a portfolio out of state in Montgomery, Alabama. And I've been investing in Alabama about 5 years now. And there I do BRRRRs primarily, but I've bought turnkey, I've bought seller finance, I buy from wholesalers a lot, and I do a lot of off-market direct to seller in Montgomery, Alabama. Um, so Steve, you say like the opportunities haven't been there. Are you looking on market primarily right now in Montgomery?
Yeah, I just took a quick glance, and so I haven't gone
Yeah.
anywhere off of the MLS or anything yet.
Yeah, yeah, awesome. So like I can always share, provide experience in Montgomery. I know it very well. I've been out there for 5 years, been investing there for 5 years. Um, what areas to be in and out, be out of, and kind of what I look for in analyzing a property. Yeah, on market, it is going to be a lot harder to cash flow, right? That's why I do a lot of direct to seller. I do a lot of marketing out there, cold calling, all that kind of stuff, or have a cold caller that does that. So there's definitely opportunities. You just have to find the right one that works for you in your buy box, right? Um, so like a lot of these markets are going to be very similar to Montgomery across the country in these lower income rental markets, like these kind of sub 150 markets. You're going to kind of find a lot of similar things, or one block could be nice and decent, and then four houses down in the next block, it's a war zone. So like that's what's really difficult in out of state investing, is not knowing these areas, not going to these, and not, you don't want to go to every single house. You want to be able to learn it so you can just start buying them from desktops and phones and all that, right? So you could definitely help out with that. Lindsay has experience in that as well. And how many times you been to Gary, Lindsay?
2 times.
2 times, yeah. I've only been once to into my market. So like now we're doing it so much more efficiently because we understood it and know it and took that risk essentially, right? Started with that first one, it snowballed to many more after that. But yeah, Lindsay, do you have anything from those? I wasn't here last week, but any wins, losses, anything updates with you?
Well, I know we've been texting, so I am in the process of cashing out rehab to
Mm,
properties. So one of them is a duplex, one of them is a single family. The duplex ARV, my prediction was between 180 to 190,000. Appraisal came back on 190, so I'm happy about that.
nice.
I just actually just made a video about it. I also have a YouTube channel, Linda's Investing, if anybody
Yes.
trying
Go
to
watch her
check the
YouTube.
numbers. I am very transparent with my numbers, so how much I put down, how much rehab costed. You know, I had a fire and a burr in the past, so that's even there too. And then this duplex particularly, I did not plan on changing the roof, but there was a leak in April earlier, so I had to change the roof. So that was the problematic thing. But fine, I was able to get, well, I haven't closed yet, but the appraisal came back. So we're gonna close probably next week.
Mm,
But I will be able to pay myself back. And then this particular deal, I'm partnering up with my sister, so I'm paying my sister back too.
yeah. She lent you the money on it, your sister?
She's equity partner, so she did
Mm,
half up of the rehab.
nice.
Yeah. All in we're
That's
like at
awesome.
137,000. So it
Okay.
applied for 190.
Yeah. Yeah, that's huge. Well,
What was the purchase
congratulations on
price?
that.
40,000.
40?
Yeah.
So almost all cash?
Yeah.
Wow. How much
Um,
rehab worth?
So 137 minus 40. 97,000 into the rehab. And then so technically it was going to be old in 80, but the roof basically took off.
The pop top?
Yeah, basically.
mm,
It's a flat roof. I never had a modified bitumen roof. That's a different, it's a duplex, so
mm.
it's a different kind of roof, not shingles. So that
Yeah,
one,
it's a rubber roof.
yeah, that costs more than a shingle roof, guy.
Yep.
Yeah.
I learned.
Are you
I
gonna
was
convert it to a pitched roof, like a normal like A-frame roof, or are you gonna leave it as a flat roof?
It's a flat roof. We just changed the flat roof. It has like a warranty for 20 years. So
Oh, okay, I see what you're saying.
we'll see. I'm hoping that since everything is new in this duplex, I'm not gonna have to spend anything a capex.
yeah.
Plumbing is new, water heaters are new, everything is new, roof is new, flooring is new, everything is new. So
Where's the
That's why I
property
like
at?
burrs.
huh?
Where's the property at, Lynn?
This Gary, Indiana.
Oh,
Yeah.
it's in Gary. How
Mhm.
much snow do they get?
How much? What?
Snow.
Oh, a lot.
Mm.
Uh,
Flat roofs and snow are not a good combination unless you got it well supported. But could
I'm gonna
be.
take the contractor back if anything happens. Like, here you go.
I
He's
would.
your
I would be. I would think about that one if you got like a major snowfall, having a plan of getting that snow off that roof, because that's a lot of weight.
Mhm.
Just keep that in mind. Say you guys get like a 1 in a 50-year storm or 1 in a 100-year storm, and you got like 3 feet of snow sitting on your roof, and it's going to be there for a while. You might have a plan of getting someone up there to get that snow off.
Mm.
Yeah, put that in your maintenance costs. I watched your on your channel, Lindsay. That was
Yeah.
good. It was a good episode.
you.
Yeah, I would like to hit you up one-on-one on that whole process at some point.
Long process.
How long was it mostly waiting for the permits that took so much time, or the contracting?
So I think I explained in my So my sister has said like, okay, let's go do this deal, and I purchased the deal on June. I purchased it cash. And then so I was waiting for her to get her HELOC, which she got a HELOC on, and that she finished like sometime in August. So like rehab, we didn't start until October per se because I kept getting bids that were higher, and then so my property manager was saying like maybe we'll get more competitive bids in winter because not a lot of people are working. So like I waited to winter, just October. This is when we started. And then I think we were done in April, and then the roof happened. So it's just
Now
Yes.
nobody went up on that roof and checked that roof
no,
beforehand.
they did. They did check the roof. The roof was fine. There was no leakage. There was no water damage in the property whatsoever for like since last year.
But
So
who checked that? The contractor or a roofer?
the contract, no, was it? It was like my property manager's husband, who's a contractor, who used to be a contractor.
Because when you say the picture you showed on your channel, was the
Yeah.
one with all the cracking. I would have red flagged that thing immediately
Yeah. Yeah.
because that's an improper application of the product they put over the top of that roof.
That roof was so high that they had to get drones. Like they didn't want to go up there. They had to get drones and get the pictures on. I'm like, what the
Oh
heck?
wow.
Yeah,
Yeah.
that's a big learning lesson. One of the first things I do is check roofs. That first thing.
Okay.
Yeah.
Yeah. It's a new
That's out of state investing. Every deal is learning.
Yeah, absolutely. Well, in-state investing is too,
Yeah,
Mr. Fireman.
I know. Yeah, it never stops. Never stops. Well, Steve and Jason and Alex, what kind of markets are you guys looking? I know Steve, you shared a couple of years. Where are you guys looking at, and what are you looking for? As far as out of state investing, like is it cash flows, appreciation, slow appreciation, or what are you guys kind of looking for?
I'm still trying to figure it out. Like I said, I'm invested in the Valley in Phoenix, Arizona, and the Puget Sound area up in Washington. I've looked in northern Idaho. I spoke with somebody yesterday who just recently invested in southern Idaho. I like the west. I'm going to say the west coast. It's not actually the coast. Uh, I don't want to be in California at all. I drive around
Mhm.
California. So I'm thinking Idaho, Utah, Arizona, that area. Just because I'd
Okay.
like to be able to drive to everything without. I don't want to have to drive all the way across the country. Um,
Mhm.
but but I'm still trying to figure it out. So I'm open to other markets. I watched a video the other day about Pittsburgh, investing in Pittsburgh, and I've talked to somebody the other not too long ago about investing in Alabama. I think it was Alabama. And so I'm open to all of those ideas. I'm still learning. I'm in the point where I have to save some money for a down payment. So I'm learning as much as I can um, right now.
Do you live
And
in
here
Washington?
Pittsburgh and jumped right in.
I was gonna say who let Mark in?
Here Pittsburgh.
Oh, he just got through with his YouTube.
They say, do you
Hmm.
live in Seattle or the Puget Sound area?
Yep, I live over in Bremerton.
Oh, you're in Bremerton. I'm on the other side of the bay from you, up in Mount Vernon.
Right on. Well, nice to meet you.
Yeah, if you have any questions about Idaho, let me know. I'm from Boise area, and I know a pretty good deal about northern Idaho as well.
Sweet.
And then
I'll actually
Steve,
be in Boise in next weekend.
Are you invested in Boise?
No, I'm not actually, but I will be inheriting investments in Boise. But I'm actually starting to think about exploring investing over there as well, since I'm going to be inheriting 6 properties. So
nice. Hopefully that's good, right? Sounds good. I mean, sorry if it came from a loss, but that sounds good, right? You're inheriting 6
No,
properties.
it's well, my dad's still healthy and alive. It's just he's got 6 rental properties, not including his primary.
Nice. And those are in Boise?
Yep, they're all Caldwell, Nampa, Boise area.
I've actually been there to Boise and I think it was Kuna, something like that. Idaho.
Kuna. That's
Kuna,
where.
yeah.
Yep, that was a suburb that exploded. So yeah, well,
Yeah.
that whole area is ridiculous. Honestly, when I drive there, it just blows my mind because it's like Phoenix 2.0,
It's all
basically.
Californians there.
It's the crazy thing about it is like I grew up there. I have a ton of family there. Like I have a brother, I mean I have a sister and my brother-in-law. They purchased the property back in like 2014 out in Star, and now they're being encroached by a 450 tract of quarter acre to 3/8 acre new builds, and it's new builds as far as the eye can see. Like the one thing that's it's everybody that's moving there, they're gonna soon pay reckon with is the fact that like getting around in that town is going to be a giant headache because the transportation system did not account for the growth.
Mm.
So it just, but it's crazy how many new builds are over there and how fast they're building. And like, I just don't know where the people are coming from because like the economy in that area in terms of the businesses and so forth don't really support the actual housing values. Like when we were there back in, gosh, what was that, April? No, that was March. I was just curious what the median house value was there. And it was like 583,000. I was like, oh, that's similar to my market. But that there for a lot of people, it's I mean, if they don't are not a self-employed, business owner or they don't work for a good, company, like the income's not there. It's just not. I mean, minimum wage is still there. It's like I think 9.95 an hour.
Oh, wow. Yeah, it's not sustainable with $500,000 house, right?
Yep, yep. So from what I understand, we're talking to some real estate agents over there and people that I know, family. Like I've asked them, I'm like, how is like this economy supporting this growth? And there are a lot of people that are working from home, working remotely. Like I know friends of family that they've recently relocated from California or the Seattle area or somewhere else where they moved to Boise because of it was a good place to live. They thought the cost of living was lower, et cetera, and they work remotely.
Mm.
I mean,
Steve and Alex, oh,
yeah, go for
when
it.
you when you guys are analyzing properties, are you guys looking at economics in the markets, things like that, job growth, jobs, population growth, things like that? Are you there yet, or are you just kind of still studying what kind of investing you want to do?
This is Steve. A little bit of both. I know more about that data for my market in Jack's.
Mm.
But minimum cash flow is a question I have. What is a good minimum cash flow to consider a deal viable? I know from my Reno property, I was in a position for years where it was like 150 a month, and it was pretty rough when stuff broke.
Mm.
But the appreciation has been massive for that property. So I think to answer the original question is I'm looking for a hybrid of reasonable cash flow with more upside potential on the long-term appreciation factor is what I would prefer with what I currently know.
Yeah, yeah. I'll go on that. In my current market, I know appreciation's next to nothing, but cash flow is going to be there. Rents are going to go up. That's going to go down. As far as what that number looks like for you, that's one going to be, how your financial setup is, two, how you're buying the property, and then three, like your risk tolerance, right? So, um, that really all depends on how you're getting it and what you're comfortable with. But I like to be around 500 a door. I also self-manage every single one of my properties. So that is different on my end in my business, but I'm buying Burr with private money. I'll cash out refi on that property as long as I'm getting around 500 a door. That's after expenses and PITI. Then it's a buy for me. And it fits in my buy box. It's good to go. My contractor walks it, then we put an offer in and we're moving forward with that one. So that is how I like to do it on my Burrs. That's where I like to be at. Um, and that's what I'm kind of looking for. But it all depends on your structure. You know, are you paying cash for it, and do you want to make $1,200 a month on it, whatever that is, looks like, or are you going to be financing all that, and then your risk tolerance? Can you manage a rehab from across the country or states away? Um, and then your risk tolerance, like, do you even want to deal with 3 months of vacancy and a rehab and stuff going wrong or a roof incident like Lindsay was talking about, like, all that kind of stuff. Do you want to do that, or do you want to just buy turnkey? If you're buying turnkey, obviously your cash flow is going to be lower, right? So that's kind of how you got to depend how you want to buy. I started out buying almost like they're rent ready, but I wouldn't say fully renovated turnkey. But I also just jumped in. We bought our first two cash and then did a burr on
Oh,
those without even
they
knowing.
didn't accept it. So,
Uh,
it's for Monday now.
Jim.
Mm.
Sorry.
He's being a
Um,
contractor.
yeah, but yeah, I bought my first two cash,
Multitasking.
cash out refied, and then snowballed into more and more, and then found different ways to buy. And now our seller finance creatives, like everything else now is becoming so much easier because I've been doing it now for a while. But I think that all depends on what you're looking for. But in Montgomery, Alabama specifically, and the suburbs surrounding it, appreciation is going to be next to nothing. But I'm also trying to buy at 40 to 50 cents on a dollar on those properties now. So I'll come in with equity, but I also have to fix it up, if that all makes sense.
Yeah. So value add is a major part of the playbook there, is what I heard. But yeah, I have enough money for down payment. So I've been kind of just going to my local real estate meetups.
Mhm.
Met some private money lenders last night at an event and a hard money lender. So looking to learn more about that process.
Yeah.
And probably want to try one of those in my backyard before I start doing them out of state.
Mhm.
Something I can be checking on until I really get that process down. I'm shadowing a friend who's in the middle of a flip right now, so I drop by the property every 2 weeks and
Nice.
learning from his pitfalls. $30,000 foundation issue that's
Mhm.
cutting into his margins pretty hard right now. So yeah, just trying to build a small network here of people like me, small, looking to share our failures and our strengths and help
Yeah.
each other solve pain points, really.
I think that's huge. Visiting a current flip or somebody else's project, I wouldn't let it scare you, and I wouldn't overanalyze it. Every single property I've done is different, right? It could be good, great, terrible, whatever. There's always going to be something going on, but it's just having knowing how to mitigate that, how to fix that, and move on to the next thing. Um, and I wouldn't overanalyze too. Like, don't let it scare you. Don't back off from it. Just jump in. Like, honestly, it's the best decision I ever made, was just starting with one, and it snowballed to so many more now. So it's just so much easier now, right?
Yeah, appreciate that. Thank you.
I was gonna say that if you know your strategy with the property, like, are you gonna have property management? If say for example, if you're gonna buy out of state, is how you gonna operate it? Are you gonna do it yourself? Or are you gonna hire a property manager? What is the expenses gonna look like from there? From there, do you have any major issues that you're gonna have to come out of pocket with eventually down the road to repair? Say like your mechanicals, say you have a furnace you're gonna have to replace within a matter of 2-3 years, or a hot water heater. What about the roof? Is that going to be something that's going to have to be replaced within 5 years, 7 years, 3 years, 10 years? Have an understanding like where that money is going to come from to take care of that. And then, are you going to with that being said, it's like if most of that stuff is in good condition, then your reserves are not going to be as nearly as important. So, you could probably be able to get away with having a smaller cash flow if the property is in a good area, or it's a good investment and you're having a property manager manage it for you, versus a property that's going to need some significant, repairs pretty soon. That's where your cash flow is going to be more important.
Yep.
Yeah, that's good feedback. Vince, are you using certain software to help manage your tenants? Are you kind of doing it old school, or how do you do that?
Yeah, no, I
Go
I
for it.
use Turbo Tenant. Turbo Tenant uses, or every tenant except for one currently uses Turbo Tenant. She's just really, really old. She's been in one of the properties like 20 something years. Um, but every tenant uses Turbo Tenant. So they all the maintenance requests, payments, um, everything's tracked through Turbo Tenant. I'm a big fan. There's a ton of them out there. I know some people use other ones, but I like Turbo Tenant. It's worked well for me.
It
I
prepares
think
all your year-end cash flow statements and all that.
Yeah, you can add the bookkeeping on. So there's a Turbo Tenant, which is your uh property manager essentially, and then there's REI Hub, which is your bookkeeper. That's an add-on. I think it's like 60 a month or something like that on top of the, I don't remember how much it was. Don't quote me actually. Um, but yeah, that you can do your bookkeeping through there. You can track each property. It talks to your Turbo Tenant. You can put this $50 Home Depot charge on this property and you move it all there and do that. So I'm in the process of moving everything out of it though, the bookkeeping. I need a little bit something more in depth because I'm doing so much more with flips and rentals now. So I'm moving it out and we're going to QuickBooks. But um I think for a couple rentals, it's perfectly fine. The day-to-day bookkeeping is perfect. It works.
Cool, thanks.
Yep.
This is Alex. So in the Phoenix market, I'm pretty comfortable, or at least I have some trusted boots on the ground. So I've analyzed that market just by experience, but I don't really know what I'm doing as far as analyzing a market. So when I start to look at another market, or analyze another market, I don't really have a process for that.
Mm. That is that's like one of the age-old questions that I say investing, right? Like, what are you looking for? How do you know it's good? How do you know it's bad? What differs this from this city to this city, right? I'll tell you with mine, and then Lindsay, if you want to share too. We narrowed it down to like three cities, and I was the analysis paralysis over analyzing, talked myself out of every single property, was like, no, I can't do it. It's like too much money. I'm not even looking at it. Luckily, I had a cousin who's a realtor in Montgomery, Alabama, who was my trusted boots on the ground starting out. So she would walk us, but we're looking on MLS, right? So we're just picking out five and she's walking them, looking at them, telling us her opinion, but she knows nothing about like structure of a house, right? So she doesn't know this toilet's broken. Okay, cool. We're not going to buy it because the toilet's broken. Like we're just talking to ourselves on every property. So she was our boots on the ground. We did all the analytics of what big companies are out there, where are people working, what areas are these people living, where they're working at these jobs, population growth, crime rates. We did all that. It's settled down honestly to trusting her and having her boots in the ground and sending us pictures and getting her feedback on these properties and just having her on the team. That's where it really boiled down to. Other cities looked way better to us on paper, but we didn't have the structure in the team, right, starting out. So I just started out because I had her and I never really looked at any other market. And just grew that one and started building and building, and then now I'm expanding the suburbs outside of it. But uh the team was the hardest thing to find for me. I self-managed, like I said, so you're only as good as your team, right? And that was by far the hardest thing, finding HVAC, plumbers, contractors, roofers, yard guys, like just finding different specialties and these blue collar guys was the hardest thing for me. It took about a year for me to lock down a good team, right? But all it was for me was just having somebody I trusted. and went from there.
Yeah, I would tell you what the book says. The book says you're supposed to look at population growth, job growth, average median household income over 40,000. You would want to invest somewhere if the household is bringing more than $40,000, so because that means they're out of poverty. And then economic drivers, right? Like what kind of jobs do we have around the city? And price to rent ratio. So if you're able to rent it for more than you're able to put a mortgage on it, then that means like you're probably gonna make some money. It depends really on your goal. Like, what do you want? Do you want, like, are you trying to get out of your W-2? Like Vincent says, like, a lot of us, we're trying to replace our income because we don't want to be in this like rat race. We want something more passive that we're not working like 9 to 5 for. And then so like cash flow is more important for us. But if you don't hate your job, you have your own company, like you're not trying to get out of it, then you would have to measure like what's the price that you want to pay. Are you okay with having a property that breaks even? And in 10, 20 years from now when you retire, the property probably would appreciate a lot, and then you will sell it for a profit, or you would like keep it, or rents will raise. Like, what are you trying to achieve? What I did was like I needed a estate that was landlord friendly. I'm doing this on my own. I need something that is going to cash flow. And the most important driver that I had was like people that I knew in my city, in my network, that were doing it successfully and were getting cash flow over 8%. So that was my decision making process.
It's good.
Yeah.
Yeah, so it all boils down to your risk tolerance, what you're comfortable with, who you trust, who you have on your team, kind of all that stuff like factors in with your comfortability of making this first initial investment or expanding in the city, all that stuff. And I'm very risk tolerant. No, what is it? What does it mean when you like are very risky? Was that risk averse or is that I don't know.
Yeah.
Whatever. Okay, yeah. Yeah. So I don't mind it. Like yeah. uh,
I'm risk
I don't.
averse. So.
So yeah, I don't mind it. And also, I was working to get out of a W-2 job. Um, so yeah, that's Lindsay, you hit that like spot on. That's why I flip from active day to day, and then my rentals for the long term and cash flow, all that. I don't really care about appreciation, especially in these markets. I just want the cash flow. Like, yeah, I know the cash flow is only going to increase over time. That house can stay 77 grand for 30 years. I don't care. I mean, it will probably go up most likely, but if the house is 55 years old now and it's still only 77 grand, it's really not going to go up much, right? So yeah, all that depends on kind of your own personal goals. I would kind of I sat down and wrote down everything I wanted and what I was looking for. And once I did that, things exploded and went faster. Like I set goals, and then I also set my business goals, my personal goals, and then like what I wanted out of this whole thing, right? And I'd look at it, I would read it, do it, and it just kind of took off from there. So I hope that helps a little bit.
So my goal is I have 5 more years working at my W-2 job, which I love. Um, I love it now. I think
Nice.
after a few years it'll get old, but it'll do me until I can stop working, and then or do something else. So my goal, and I have some assets already, some houses that provide the equity. Like I have a lot of equity growth in my market now. So that's
Mhm.
why I'm actually considering out of state and cash flow. That cash flow will replace my W-2. The equity will add will keep me there once I retire.
Mhm.
So I'm getting some cash flow, some decent cash flow out of the equity houses that I have, but I think that I'm going to be going the route of cash flow, and it's harder to do that here. So I'm looking for that balanced portfolio, but I'm also um, try to be able to replace my income within the next 5 years. I don't know. So I'm going to have to find a quicker, that's kind of an accelerated path, I think. But I'm already halfway there, I think. But I'm partway
Good.
there. So that's my goal.
Yeah, that's very doable. 5 years, I would say, very, very much doable for out of state or for cash flow, right? It can be any market, but yeah, that's good. That's good.
Tim, do you want to introduce yourself to the group?
Hi, how's it going? My name's Tim Hoffman from Miami. I live in Miami. It's really hard to get any cash flow here in my backyard. Started probably investing maybe about 7 years ago. Should probably be a lot further, but made a lot of mistakes trying to do everything on my own, trying to figure it out on my own. Started bought like 2 trailer homes maybe like 8 years ago. It was like cash flowing between both of them like maybe $4,000 a month. So I felt like I was doing good until the association caught on to how I was renting them out. I was renting them out kind of like almost like individual apartments. The trailer was like split up into several units. So then once the association found out, they had an issue with it, and then I sold those, and then started buying properties in Key Largo, which is about an hour south of me from Miami. However, the property, when I started buying the properties, the first one I bought was like maybe 650,000, but now like maybe 5 years ago or so, 4 years ago, now the properties are over $1 million. So there's a lot of appreciation there. However, to get into properties over there now is, $150,000, $200,000 to continue to grow over there. So then maybe end of last year, I started buying properties in Detroit. So I have 4 properties total in Key Largo. Been nonstop working my job, looking like there's an end of seeing the light, but the light seems like it's still so far away of a possible replacing that income with my W-2. So that's when I decided to make a move and start investing in Detroit. It's been kind of rough over there. I bought 2 properties late last year. One of them has a squatter in it. The other one got the rehab complete, but had a terrible property manager, an excuse every other week. So now I got, paying a little bit more, but a professional company that I just started with a month ago. The name of the company, I think, is Tradewinds Property Management. And so it's only been a month. So they're working on the eviction on the one property. The other property needed a little bit of work. And then hopefully, and there's some water in the basement they're still working on. And then hopefully we'll find a renter before the end of summer.
Nice. How did you find those properties in Detroit? Were they on market, off market?
I'm trying to think of it. The first one I bought was they're both on, everything was on market.
Mm-hmm. Nice.
I was on Facebook Marketplace, found connections with people that were doing investing, got connected with the realtor. He seemed kind of young, but everything is a learning experience to just try to build the team and get everything moving. But with this management company, they're pretty much taking care of everything with I think it's a 20%, 10% management fee, 10% for to list the agent to get a renter in there.
Up front, or the 10% is to find the person, and then 10% monthly after that.
To manage it, yeah.
Okay, to manage it.
So
But they're also managing
like,
the rehab.
As far as I have contractors that I work with separately.
Oh, okay, got it.
That I've been just kind of, that's why things have been taking so long. So it's probably worth paying a little bit extra to just get it done. Because now I got a squatter in one of the units. because I was trying to only focus on Section 8, that this guy was supposedly a specialty. That's all he did. And to get the rents, and then he just every couple weeks, every week I was following up with him, but every couple weeks he'd have another excuse. He was in the hospital. Something else major was coming up, or then I had an issue with getting the gas connected. There was a couple different issues, that just roadblocks that I had, and just working through it. And then my properties in Key Largo, I have a total of maybe 14 tenants. 2 of the properties I'm doing like co-living, because I'm trying to figure out ways to generate more money.
Yeah.
So that's been a struggle as well. Just it's with the co-living. Out of, I think there's 2 of them are duplexes, 2 of them, and then the 2 of them are duplexes, and then it's half annual lease, half co-living upstairs. So it's kind of just a mix of everything, and it's I'm self-managing everything down there, because it's only about an hour drive. And it's just a lot of turnover with the co-living, but it is still profitable, more profitable than doing annual lease,
Long-term
renting
rental.
out the whole place.
That's cool.
Yeah,
That's really cool.
I've
Yeah.
been to Key Largo. I could see Key Largo being a good area for doing rent by room for co-living.
Yeah, I'm getting, the cheapest room is around $1,100 a month. The most expensive room is about $1,700 a month. So that's been working out pretty well. Typically, I typically always have one room empty, and it typically takes about 4 weeks max to get someone. Sometimes in a week I get someone. So, but there's always someone moving out. As soon as I fill it 100%, it's like the next month someone's moving out again. Out of 7 units that are co-living.
How are you
That's
marketing it?
huge.
Huh?
How are you marketing it? Just on
Just only Facebook and Craigslist. Between those 2, I'm getting quite a bit, but it would be nice to find another
Pad
app.
split, right?
Was that?
Pad split, isn't that that's for
No.
COVID?
Yeah, you could use Pad Split, but if you use Pad Split, you got to kind of like give them the whole house. You can't just pick and choose.
Oh.
And then you got to pay their management fee and all that other stuff. And I looked on Facebook, and all I see is a lot of people complaining about, because they rent by the week. Well, they charge by the week, but I think there's a longer contract. I don't really know exactly how it works, but the people are paying by the week, so it makes it a lot easier for people to pay in that aspect, I would assume. And every time I go on the Facebook group, I breeze through there from time to time. Everyone's complaining about the fees and how much they're charging, and then there's a scam that people are doing where they move in for 2 weeks, then they move out to go somewhere else, and every time they Pad Split like takes the first whole month or something, or first several weeks. I don't really know how they're paid, but by the time the people are moving out, they're moving out 2 weeks later. They're taking all the fees, so that people aren't getting any money for the month, as people are constantly just moving out, and just it seems like a constant nightmare that people are dealing with.
The way to get over.
So we'll see. For now, I'm self-managing. It's easy, but I couldn't imagine. I would have to hire Pad Split. I was thinking of doing Orlando co-living. However, I just don't know the area. I just don't have the time to invest in that either. So I just got into Detroit, and then I'm also a little bit into crypto, and then I'm like going down this path of creating a opportunity zone fund and created an opportunity zone business, so that all my profits are tax deferred for several years by purchasing in these opportunity zones. So that's kind of what got me into Detroit, because I have to tax defer this money, it has to be invested into opportunity zones. And in Detroit was one of the few places that I found where it's easy to do a 50% improvement to the property to make the qualification, to find the property that's in the opportunity zone, and then within 3 years you have to deploy whatever you purchased the property for. You have to deploy 50% of your funds. So that's kind of like why I purchased the first 2 homes, to kind of see how it goes. They weren't in opportunity zones, but I just kind of wanted to see how it goes and where, kind of if that path works. But right now I've been kind of striking out for the last 6 months, but figuring out, hopefully with this new property management company I have, hopefully they'll be able to get things straightened up with me. Right now it's just, I don't care what it costs. I want to figure out if it works and if it's sustainable, because I have about 100,000 just set up, locked up in this opportunity zone fund, ready to deploy. However, I need to make sure that this is sustainable and that could work. So that's kind of like where I'm at right now. And I want to move forward, but I'm telling myself, let me get these first 2 rented. Let me see how everything's working out, and then go from there.
That's cool. That's interesting. That's a whole new set of investing in real estate. I've never touched the co-living side.
Gonna say you should Tim, you should reach out to REI Jared. That's what he does in Phoenix. He's got 4 properties now. He would be the person to talk about with the pad split and what you're considering doing in Orlando. I think that would be a really good area to do that in, just because of the conferences that are constantly held there and the amount of corporate travel that commences in that region. You could do very well there.
Yeah. So that's what I'm looking at. But what I wanted to try and do was do everything all in one, where if there was an opportunity zone in Orlando, it's very hard to find. It's like you could go from one block to one block, and there really is no way to search. It makes it really hard to search for these properties in these opportunity zones. It's not like it's just a zip code. It goes street by street. The only thing, I forget what it's called. They have it for businesses. I forget what it's called, when larger multifamilies and businesses that are for sale. I forget the name of the site. But you could click opportunity zone and it shows up.
Oh, Crexy?
Maybe.
Or LoopNet, I think, are the big ones.
Yeah, LoopNet. One of those, you could click opportunity zones and it all shows up. But for single family homes and land that's not on that site, it's a nightmare. You have to like copy and paste, or highlight area, draw circles around areas is what I've been doing, and just to try and figure out. It's been a difficult road to try and figure out that aspect.
I don't know, co-living, what do you mean opportunity zone when you say that?
It is if you Google opportunity zones, there's a couple websites that you type in the address and it will basically show you areas that each county or each state will say that this area is kind of like low income, or this area is deteriorating, and there's incentives to improve the areas. So that's what they're trying to do, is get you to improve the area. And from what I understand is when you buy a house there, it's my understanding that on top of the tax deferment that I'm using this for as well, on top of that, it will also, it's my understanding, when I have to sell the house and I have to, make a 50% improvement to the house, and then I'm only allowed to hold this house for a maximum of 10 years, and I have to sell it. And from what I understand, any any appreciation on this house, from what I understand, that I'm not going to have to pay taxes on that. Is what
Okay.
I believe, but I'm
I-
still figuring it out as I go.
Yeah,
Tricky
I've
tax
done.
code thing.
I have 3 properties in an opportunity zone, and they little bit of research I've done on it, they've all told me that it has to be a big fund. You can't just do it individually. I know I've only done a little bit of research, but I was told right away that it has to be a fund. It can't be individual.
That's correct. I created a fund, and I had to create a business.
Gotcha.
So it's my personal. The problem was I didn't trust anyone with my money, because I hear all these horror stories of people making these investments, and then the fund just deteriorates, or they're not getting the profit that they thought they were. So I was really nervous about going down that road. So
is that an extreme expense to start that fund up?
there's a company that I used. They set everything up. It was about $10,000.
Okay.
So they basically create like 2 LLCs for you. I was going to do it on my own, but it is very confusing, and it's just a standard LLC the way it has to be set up. And then there's time limits that you have to follow from the time you make your sale on your capital gain to account for it. From the time you make your sale, you can do anything you want with your money, and then you have 6 months that you can do anything you want with your money, but within 6 months from your sale, it has to go into the fund. And then once it's in the fund, depending on when you enter it, you have 6 months. But if you do it after January 1st, then you have till the end of the year. They basically give you a certain period of time. Then from the fund, the money has to go into business, and then once it's in the business, now you have 30 months to deploy that money. So it's almost like 4.5 years that you have to deploy that money. You could also, if you sell a property, you could put that money into the fund, so you don't have to the extra earnings into that fund, so you don't have to pay the money that you're going to pay for the taxes. You put that into the fund, and you could use that instead of doing a 1031. So I saw multiple different avenues that I could be using that, and right now I got $100,000 that I was supposed to pay to the government, and I have that in the fund, and it's just tax deferred. So I was thinking that as I progress and get more properties, hopefully, I didn't really want to do forget what they call it, the cost segregation and all that kind of stuff. I didn't really want to get into that, because if you sell the property, you have to pay it all back, and it just turns into a big mess. I didn't really know where I was going. I still don't know where I'm going, but trying to just figure out the best path. So right now it feels like it's paid for itself, and hopefully the rest of this year have some more earnings in crypto that I could be putting into there, and then to start moving forward from there. So right now it's just testing the waters in Detroit, trying to figure things out, and go from there.
I would say
That's really cool.
if you're looking at Orlando, why don't you go on the Pat Split website and locate the houses that are in Orlando and reach out to those owners, see if they're doing what you're doing, which is finding that opportunity zone, or are tired of doing co-living and trying to like get the properties off of them by keep tracing them.
Right. Yeah. The biggest thing in Orlando, what the struggle that occurs is you have to do a 50% more to count it as an opportunity zone. You got to do there's all these rules. You got to do like a 50% or more improvement to the house. So houses in Orlando, 400,000, maybe you find a great deal, 400,000, but they're probably around $500,000-$600,000 average. So to spend that much on a home improvement of several $100,000, where in Detroit, it's not easy, it's easier to find houses in Detroit in the $60,000 range, and then you do a $60,000 home improvement. You check all the boxes, and it qualifies. What I would have to do in Orlando, the only way I would have to do it would have to be a new construction, because of the value of the homes are so expensive, the numbers don't work out. But it's just it's been, I'm so used for the last 4 years I've been managing my own properties in Key Largo. I'm so used to being on top of everything and just figuring out what doesn't work. I did Airbnb, I did long-term rental, now I'm in co-living. I've done quite a bit of everything. Just whatever doesn't work, I just pivot and just keep going. And here in Michigan, it's like I've had all these roadblocks where it's been a difficult process.
Lindsay, do you have anything else you want to share or talk about? I actually have to hop off in a few minutes.
Yeah, no, I don't really have any more updates than the cash out refi that I did. But does anybody have any questions or anything that struggles they're wanting to talk about or discuss?
Awesome. Well, Mr. Hoffman, thank you for sharing all that. That was really
Yeah,
interesting.
that was like
I
a
wrote down
101 on
some,
opportunities.
yeah,
I'm
I
gonna
wrote
have
down
to
some things
research
on that
this.
for sure. Well, awesome, everybody. I hope we provided some value. We will be here same time next week, and looking forward to everybody joining and talking again.
Bye,
All right,
Mark.
everybody.
Bye.
Have
Thank
a
you.
good weekend.
Thanks, everybody.
Bye.